Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. I'll just wait a second here to make sure YouTube is doing its thing. Hello, everyone. And it is. Yay. So, welcome back to the market. And actually, crypto people, you're here 7 days a week, so it's not really like you had a break anyway. But here we are, Monday morning. Happy Monday morning. The 30th of March. Normally we would be talking about things like tax deadlines and stuff, and I'm actually not quite sure what the tax deadline in Canada is now, but I would imagine the government wants its cut regardless. Anyway, um, also, we've been talking a lot about things like celestial events coming up here. We had the Ides of March, and actually, under normal circumstances, I would have expected the market to pivot through this. Also, too, we have Japanese fiscal year end. I think actually Canada's fiscal year end is 31st of March. So a number of countries around the world also have their fiscal year ends. So lots of back and forth and position squaring and finessing of the market through this window. We had sort of talked on the daily brief today. I'm kind of feeling like, but I don't know whether I lost it or not, but I was showing everybody. God, I hate when I'm trying to find these damn things. This isn't the best example, but nonetheless, this is the image that I'm thinking about right now. It almost feels like we've gone through sort of the left-hand part of this is what they call a billiard ball fractal. We're going through the eye of the storm right now. It's interesting how some people were saying that the 31st and the 1st of April are supposed to be the big sort of, oh my goodness, focal points. So I do find it interesting how the market is kind of quieted down through this. And then coming out the other side, and think of sort of like the eye of the storm. Coming out the other side, we should see some volatility leaving this sort of apex event. So that's sort of the way that I've been approaching looking at the market here today. Where do we start? Obviously, good place to start with the hegemony proxy of the world. What the hell is the US dollar index doing? And I thought actually this is a really interesting commentary. Don't think of this US dollar index rallying as a really bullish vote for the US dollar, but think of it more as like a bearish vote on all of the other currencies. Because keep in mind, this US dollar index, technically it is a basket of all of these other currencies marked against the US dollar. So in a weird sort of way, when it's going screaming up like this, what it really is saying is everybody's getting the hell out of all those other currencies and getting into sort of T-bills and stuff. Fractal bottom sort of marked our panic begin. Fractal top, I think, marked our sort of panic end. And the end result out of the end of last week was a big fat $2 trillion bailout. Thanks. And the irony of it all is you go, oh, well, download it onto the taxpayers. But let's call a spade a spade. I mean, taxpayers are never going to see that bill. This is all funny money that the United States of America is just sort of creating out of nowhere. And how do you pay back a $16 trillion debt? I mean, you can't pay that back. At some point, the Fugazi will come to an end. But my hunch is that probably won't be till the next big sort of financial crisis, which, ironically enough, doesn't actually come for another, good 15 years or so. So it is what it is. U.S. dollar index, interestingly enough, just sitting right at the midpoint of this massive range. And in all honesty, we should expect a test of both ends of this wide range here before the year is done, absolutely. My hunch, for whatever it's worth, and it's just my opinion talking out my ass, my hunch is actually we are going to come back down and test these lows. Probably into that May-June period. That's when the market is supposed to have a bit of a reprieve from all this insanity of this year. And then once we sort of mark those lows, then we start climbing back up, getting ready for that nutso insano November pivot. So as it stands right now, I think we're actually, ironically enough, at a bit of an equilibrium point. And I do see that, kind of like think of that fractal, the billiard ball. We're sort of at the middle of the storm, and we're just calming down here a little bit. In fact, actually, you could probably, see this image right here. It actually looks very much like this. I don't know, maybe more like this one. I don't know, it's tough to say, but hopefully you can see that similar image in the US dollar index itself. You probably have to come down to a lower time frame, but nonetheless. So no freak out right now. Calming. Think of sort of, the eye of the storm. Things are relatively calm right in the middle. And we have to come out the other side. No real signals today. This is a railroad track, so if we reverse and head higher, well, then back into chaos we go. If we break these bottoms, then that's a midpoint consolidation. Think bear A, B equals CD, and more rosiness is ahead. Interestingly enough, on the stock market, think risk on, risk off, kind of that eye of the storm. Things are sort of calming down here a little bit. We've actually got a bit of a trading range established. But one thing I did notice, and you probably remember from last week, I think it was last week, maybe it was a week or two ago, we had one big day in the stock market, and you know who came out and went, "Oh, this is the greatest stock market rally in history." And everybody's like, what the fuck? Market gaps lower from where it closed that day and just cratered lower. So there's a hole in the charts up here. It's a really messy price action. And I think that's actually where our significant resistance is right now in the U.S. stock market. You can see how we rallied up on Friday. We talked in the weekend show about things like 38.2 fibs. So I don't think it's a surprise that we've run into some traffic up top here. Yeah, right in here. But I don't think that this is actually done. And of course, if this is a top, we probably want to see things like divergence develop off of lower time frames. So if we go down to things like the hourly chart, I don't know whether I have indicators on here or not, though. I may not. This might just be the algo. Actually, this is your chart for you guys. Yeah, anyway, point of the matter here is there is a key low from that structural fail level. There is that rally peak, greatest stock market ever. Then the market freaks out. You can see the little bit of a gap right there. It's not really that pronounced on this chart. And down we went. So my hunch is that if there is traffic, this is where the traffic is. And interestingly enough, we are trading a day trader plan on the site this term. I like to do different setups through the different terms, just as sort of demonstration how do you run a day trading setup. So here's a setup that we are trading right now on the Dutch stock market of all things, but nonetheless. And it simply has us looking for pivots through kill zones. And structurally sound on momentum signals, etc. Point of the matter here is we almost had a signal against these highs come in earlier today, but no M developed, and we never did break down through 50 line. Same sort of thing here. Nowhere near 50 line for this particular trading plan, so certainly no trades right now. Interesting to watch. We've come back down on RSI against 50 line here again. If we M out here, well, we might get a signal. But what I found interesting was, that S&P 500, well, you can see the gap on the Dutch market. You could drive a truck through that. So that's sort of that same level over there on the European stock market. So, with that European level and that comment that I had there just a moment ago about the S&Ps, I'm feeling like we can move a bit higher here. But, keep in mind, kind of like Bitcoin the other day, we do have a bit of a trading range established here. If we start emming out and failing, well, you just got to follow the signals. So if there was an ideal location for me to be thinking about a top, it's just a little bit higher. And also, too, we are starting to get some good divs coming in here. You can see the div. This is a 5-minute chart. So not really the best midterm analysis piece. But nonetheless, as I had said just a moment ago, I wouldn't be shocked if we actually saw a price move up here a little bit more and then Third, sort of like Tuesday, Wednesday, London kill zone, 70-80% of all trades trends for the week are established. I like the idea of the market moving higher and then topping out, think middle of that eye of the storm, fractal kind of thing, and then us tipping over heading into the big celestial event here. But we'll see what happens. Only time will tell. So, with all that said about stock markets, it's fascinating to see the crude oil market just can't buy a friend in here. Just keeps pressing lower. And in a weird sort of way, this crude market is now sort of that, slow drip of death kind of thing that, traders hate because it's sort of lower highs and lower lows. It is a bear, but at some point we should expect a puke out here to sort of mark the bottom. Interesting on the sort of the other side of that equation, the bonds absolutely love when energy prices fall because that's deflationary. So, and this is a great analogy. Traders got to trade. I mean, I came to TRI to learn how to trade crypto, and here I am, I'm trading bonds. What the fuck? But, if you are a trader, you just hunt trade setups and you just got to take them as they come along. And actually, this is a pretty good looking bot setup. So bond market's just continuing to work its way higher. And as long as crude's working its way lower, I don't see any reason why this is going to stop. And then, of course, if we do get that top, Tuesday, Wednesday, London kill zones, think, stock markets and the stocks actually do start topping out. This thing's now in a position where it can run here. So just be cognizant of that. So bonds pointing higher. Stocks still pointing higher, but I think they're getting into traffic areas. Oil just can't buy a friend. Interesting how gold is just sort of sitting here going, do I break? Do I go higher? What do I do? What do I do? We did have a 4-hour setup come in through Friday's session. Now, is it a good idea to strap on a new position heading into the weekend? Probably not. But nonetheless, for the gold bugs on the site, we'd like to keep an eye on all these. Here it is. So silver has actually gone an inside bar failed. So that little dead cat bounce rally has stalled. And I think, as I've said recently, lower time frame setups in reload zone, super sexy to me. But gold here actually did go and top out last week, but you can see it's just sitting right at that level going, what do I do? What do I do? What do I do? And, let's call a spade a spade. If stock market's feeling better, if the currency markets are calming down, there isn't as much fear in the marketplace, could gold prices come off here a bit? I don't think it would be shocking if that happened. So, take it for whatever it's worth. I'm not really a big commodities bull right now, and you all know that anyway. Can't be a commodities bull for the next 15 years. I have to be a commodities bear. Yuck. All right, so where is your chart deck? Here we are. So risk on, risk off. Hopefully I've given you a half decent idea there. Stocks that I am interested in, love this. Interesting enough, the bank stocks with the big bailouts and stuff like that, they basically have a blank check now. So love stocks that are in the crypto space, and this one happens to be a bank that services the crypto industry. Hopefully everybody can see. Beautiful example of railroad tracks coming in here. I think I told you that I did go and grab some off the lows here recently, but if this thing actually W'd out, I'd go and grab some more. Well, now makes it really simple for me. Railroad track signal tomorrow, I'm buying, so I might add a bit more to that position. Be aware of that. Watching big Canadian banks for head and shoulders patterns. We'll know that this correction is over if these things go and head and shoulders their way out. Some of the utilities, again, think conservative RRSP kind of stuff. Very interested in this alt gas. It's natural gas utility. They came down and kissed Mountain Man this morning, but you see the big gap here. I want to see a nice close in here, please. So I'm not quite ready to get too uber bullish there, but very, very close to being in a position to pull the trigger. And then lastly, one other stock in the hotel and REIT business. Um, I went and bought some of this back last fall. Woo wee, that wasn't the smartest idea. Um, Probably a really good analogy that, if the market does prove you wrong on an idea, it's probably best just to walk away because holy shit. But I live by the sword, die by the swords. I'm not going to blow smoke up your ass. I'm definitely heavily underwater on this position. As I've said repeatedly, this is a trust unit in Canada. It's a fairly large corporation. They own a number of different assets, and they pay out a very thick dividend. So my attitude here is I fully expect that dividend to be cut, probably on the dividend cut date. That's probably when this thing ultimately does bottom. And I'm going to be looking to add to my position to this, but remember I've said in previous videos, don't let that 5% rule be broken. Right now I think my number is actually up to about 1.5%, maybe 1.75% portfolio exposure on this, so I can add to my position. But no doubt about it, this is a painful one for me, and it's going to be fun talking you through this and just showing you over the next 6-8 months how I handle this position going forward. Actually, probably the next couple of years. Anyway, it should be an interesting story to follow nonetheless. On the corn itself, I'm very encouraged. Like I said, risk-on assets are catching a bid here today. So shouldn't really surprise us to see that Bitcoin, Litecoin, Ethereum are all enjoying a bit of a bid. Bitcoin itself did have that big futures expiry. Interesting, once that happened, price did dump, but then through the weekend, the selling just stopped. That's probably a pretty good sign that, there's probably some value down in these levels. And I've said repeatedly, if you can try and buy these assets at or below cost of production, I think that's actually good investing from a fundamental perspective. But if you're going to do that and just simply do, I believe this is fundamental value, don't go and shoot your wad all in one trade. Try and stagger your purchases over time, i.e. dollar cost averaging. But with the current price action in place, and this was a fun experiment I did today, trying to understand the role of the Nautilus shell in this price consolidation. Interestingly enough, just for fun, the Nautilus shell is based on the whole idea of the circle and pi. And just for fun, I changed the scale settings to 31.4 dollars for every $1 movement in time, or basically pi. So just for fun, I was thinking, well, what would happen if we change the scale to pi to sort of align with this? And actually, I was pretty impressed with the results here. Usually what ends up happening at the end of these triangle consolidations is you get this puke out. And at the end of the consolidation right here, especially on this move to new lows, we go down and we look at our momentum indicators and see what they're saying. And I thought it was interesting to see that things like MACD histogram actually put in a bullish divergence through that event. This isn't, of course, enough of a reason unto itself to take a trade. That's a V bottom. But at least now we can say, well, we were worried about this big bearish setup here. And, does price need to melt down to continue on this bearish MACD pattern? And at the very least, bulls have to just cool your jets and wait for this to play out. Well, this is basically it playing out here. So it seems to me now momentum is sort of caught in this sort of sideways range. Probably this is the upside up into here. And we've got a bit of a base. Now you notice, I thought this is also a really good analogy of RSI studies. So 1M, 2Ms, third M. This trend's getting very old. This is a trap. Interesting how we never did get a W here, sort of saying that the bear slides over. I think all they've done is they've just busted the bear third trend, which is usually a trap. Rallied it right back to the second trend, this yellow one, and now we find out actually whether this thing's for real. If it goes in W's here and breaks this, well, I think we've basically parked ourselves back in this trading range. But I don't really have any W's. Notice, like this was no W and we had to roll over and come down and make a new low. Then we W'd through here, and so, okay, now we've got a nice bull to work with. So I can't look at this and go, okay, well, the bull's driving the bus. I think the bear's still driving the bus, but they've broken the backs of the late bears coming in here, and that's pretty normal. So, Nautilus shells, and I thought this was kind of interesting. And again, as a student of the market, this is really more interesting. I'm not saying the market's going to go here, and I don't want someone to reply, oh, Beamish is calling for 11,578 on Bitcoin. I mean, the market's going to do any old damn thing it wants. But I did find it fascinating that through this Nautilus shell resolution and the bull divs coming out the other side here, that lo and behold, the Nautilus shell's ultimate destination is basically right up at that 11,578. This might actually be that pre-halvening rally that we've all been hoping for. It might just look like this. You don't know. I mean, this is the life of a trader. I don't think it's in anybody's interest to get into the business of predicting where these things will go, because they're just going to go where they go. Your job, of course, as a trader is to try and identify setups and trade those setups. So, with this kind of thinking, I mean, does the market just churn its way higher up into this level? It's possible. Anything can happen in this crazy world. I don't have a trade setup here, but what I do find interesting is our little bot setup. Now, it's interesting, too, that these cash markets this high did go to new highs, whereas the forwards markets did not. So the forwards markets are still working off of one low. But this cash market with this high here technically has 1, 2, now 3 solid lows, and there's the bot level. It's kind of like the bonds. I mean, you see the setup? What's your job as a trader? Is your job as a trader to have an opinion, or do you see these levels and you just got to take the trade? I'm not telling you to do one thing or another. Hopefully, I'm just giving you stuff to think about here. I had shown, I showed through the daily brief, and I've had conversations with other TRIOGs, sort of other crypto Twitter people that I talk to on Twitter. And they had been posting out charts like this big megaphone. And I showed this on the site. It's not unrealistic to actually see Bitcoin up here at $11,000 over the next month or so. It's not out of the question. Is it likely? I don't know. But all I'm saying is it is very possible. It definitely is in our wheelhouse. I'm sure I'm going to catch a ton of flack for saying that. Like I had shown you off of that other chart, that 4-hour chart, you can see 1 solid low, 2 solid lows. These are looking like pretty powerful lows. I mean, if I was a risk taker and I got any kind of buy signal down in here, basically saying, look, I'm going to risk against these powerful railroad track levels, that's actually not such a terrible idea. So do with it as you please. I think, as I said to the site members today, if I had sort of my wish list, what would I want to see? That's ideally, of course, my bread and butter trade. But the market will do any old damn thing it wants. You just have to understand that as a trader. So crypto looking a little bit better. Like I said, stocks looking a little bit better. Do stocks rally up and fill in those gaps and stall out up at previous highs? And does Bitcoin rally up and stall out against these highs? That's definitely a possibility. I had told somebody on Twitter who was sort of saying, why didn't you get short? I said, well, I'm just going to let this thing settle out. I think right now we've got this head and shoulders type pattern. Remember, this high is a new high, so this is just one low now here over on Max. But I had told that person that if we rally up into reload zones and stall out here, you might just find that Brian's telling you he's strapped on a short and I'm going to risk against these highs. Totally realistic as well. So, Okay, hopefully that gives you some stuff to think about on the corn. You know, it's a pretty crazy market state right now. Very fluid. Um, just finish off. Really, I've been showing you this same chart now for a few days. This, if you do trade the altcoins, I think you could probably just watch what this shit perp index does. Give you an idea of trade direction. I still think this bot setup is just working away. It's got now another new low. So now 1, 2, 3, 4 solid lows to work with. Really good example of why I like to use 3 lows, because if you would say bought this and said, okay, 1, 2, 3, this low, boosh, see you later. Right? And then the guys that went, okay, no, this is the bottom, all right? I'm going to risk against this, see you later. So that's why I like to have a bunch of na levels, and especially if we have this double bottom. So they brought it right down against this double bottom, said, nope, get your butt back up there. So it's still working. I mean, that's a trader's life. That was interesting before we loaded up the video today. We were just sort of perusing. There's a few little names that I've shown you recently that I think look really interesting in here. And Kevin said, hey, check out that nav. And hopefully everybody can see. I mean, this is all now. Hopefully you're seeing that, gee whiz, this is actually pretty cliche stuff. Where we just simply draw our bot setup levels. Boom. So we got one low. I don't know whether that's a second hour low. We got 2 lows. You know, I know lots of guys who would just look at that W and say, fuck it, man, I'm just going to buy that W. But if we throw on bot levels, and here, why don't we even maximize that? Hey, there we go. Living in glorious Technicolor. And then we throw on the bot levels. Boosh. All right, so you can see where bot levels are trying to set up. Might be a little difficult here on this, but you got 1 low, 2 lows, maybe a nice little dip against this low, and then a nice little inside bar reversal or something gets you in there. But it just goes to show, I mean, these setups, they just keep coming in here. If you're a trader, and here's the irony of it all, right? If you're a trader and you're like, okay, I like this bot, whatever, just take the damn trade. In it comes, boom, okay, I'm long, whatever. Your job, ironically enough, at this point is now just to put your opinion away and just simply say, look, if we go through here, I walk away. If we go here, I ring the register. And that's my trader's life. Ironically enough, a guy who's actually in setups and just trading setups, it's actually, in a weird sort of way, it's a very boring kind of life because your opinion is meaningless. So, anyway, hopefully you can see. There are names setting up as we speak. It's your choice whether you want to trade these things. Hopefully what I do at TRI is I just, like what I tell students is I set the table. Hey, look at this fun study. Does that perk your interest? Hey, look at this fun study. AB equals CDs. How about 50% rules? How about fractals? Right? And what ends up happening is people go, oh, I like a little bit of that. I like a little bit of that. Oh, I like that one over there. They build their own customized setup, and away they go. So that's, food for thought here today. I don't know whether there's really anything of any huge value that I've given you. But, as always, PMA for the win. I like to try and help. I think we did a good job in the broiler chicken show yesterday. I think on balance we're pretty good karma people. So, okay, I think I'm going to leave the presentation at that today. Not a whole hell of a lot new. Just keep on keeping on. Have yourselves a great day, everybody. Look forward to chatting with you real soon. All the best, and bye for now.